Thematic investing can mean different things to different people. What do you mean by thematic investing?
For the team on the Zurich Investments Global Thematic Share Fund, thematic investing is all about capturing the biggest investment opportunities of the next decade. We do that by getting away from the benchmark. We do that by creating a thematic approach, a thematic portfolio focused and anchored squarely on those big investment ideas.
Steve, could you talk us through some of the thinking that goes into establishing these themes?
When we're creating and identifying a thematic investment opportunity, we really start with a holistic approach. We need to combine together all of these different structural changes that will occur over the next decade and think about how they interrelate with each other. Now, not all of those structural changes represent investment opportunities, but we can usually find a very interesting cross section globally across sectors that produces for us a portfolio anchored directly to the genuine investment opportunities that we're trying to find. I think the thing that's really exciting about thematic investing in general is that it offers this long-term access to a unique source of returns in the form of structural change. And we have a proven methodology for being able to access those returns.
Steve, are your themes within the fund static?
Our approach to thematic investing has two big differences to what I would describe as static and generic themes. The first is that we allow our themes to change and evolve over time. That's important because sometimes we get new information that enables us to refine or evolve a theme. And sometimes market valuations catch up with us, and it's very, very important to stay ahead of market consensus. So if a theme has run its course, we're not afraid to evolve that theme or indeed retire that theme. And then the second big change is that our themes are proprietary. They're quite specific. They're designed by us. So rather than big ideas such as demographics, which are actually quite hard to map to specific investment opportunities, we like to go in and be precise. We sometimes say that we like to use a scalpel, not a sledgehammer, in terms of defining our themes. A sledgehammer makes a big splash but could damage your portfolio. A scalpel is really what you need to extract that long-term return opportunity that we're all looking for.
Steve, when you are thinking about and developing these themes, what sort of a time frame are you considering?
We think that the market as a whole is fairly efficient when looking at the near term. And by the near term, I mean the next year or two. We think that the big opportunity for long-term investors, and on the Zurich Investments Global Thematic Share Fund, we would certainly count ourselves as long-term investors. The big opportunity is really 3 to 10 years from now. A typical holding period for us is around 5 years in this portfolio. And certainly when we're building our themes, we're taking a view that goes all the way out until the end of this decade and beyond in terms of framing that opportunity set.
Why is now the time for thematic investing as opposed to value or growth strategies?
But one of the problems facing many investors that we speak with globally is that after many, many years when growth investing has produced superior returns, many of those companies look somewhat expensive. They're certainly very widely owned, so the concern would be where are the incremental buyers? And then finally, they carry duration risk, which means that very long-term growth investments are vulnerable to, for example, a rise in long-term interest rates. The issue is that by attempting to diversify that growth exposure by selecting value strategies, one is bringing in a number of different problems. Value strategies often leave an investor exposed to so-called sunset industries, industries that may be profitable today but are likely to fade away over the medium to long term. In addition to that, they assume mean reversion, and that's just not how markets work. Markets are always throwing up surprises, and they don't always mean revert. So investors are sort of stuck here. And that's really where thematic investing comes in, because thematic investing represents a third way, as opposed to growth or value, to anchor a portfolio, anchor it to the future, and in doing so, produce a differentiated return stream that would blend quite well with an investor's existing asset allocation.